That's good. Teacher trade, but Tesla saved you. Did you trade Tesla? I stopped trading it once it started getting those $2-3 spreads and those huge moves right there. Not that crazy today, but it looks actually clean today. Not so great. I remember when it was one of my favorite stocks to trade, but back then it was somewhere in this range. Now, I'm not sure I'm going to trade it. It's hard a bit. Alright, so let's see what you did, guys. Then I will share with you my trade. I did only one trade today. Same thing, Parabolic Reversal, but it was not from the scanners. The scanners were quiet today, unless they freeze on my chart. Okay. So let's see what you did there, teacher. You traded NIO, right? And you took this thing for a Parabolic Reversal, I see. You take it on a new low right there, and it's getting you stopped out. Now this stop loss, again, as we usually say, it's perfect. Let's go through the 5-minute chart, through the bigger time frames first. 5-minute chart, stock going up, extended from the 9 moving average on the 5-minute chart. I guess this is view up, if I'm not wrong. Is this view up, your chart? This line right here. Or this is view up, the blue line. I guess this is the 9 on the 5, if I'm not wrong. No, it's not the 9 on the 5. It's definitely not the 9 on the 5. I can't really tell what that line is. If this is the 9, the 20, view up. Okay, the purple line is view up. I see this. Then this is view up. So look, this stock, it was extended from the 9 moving average on the 5-minute chart. But remember the webinar, what I said, it's good to get into it when it's extended from the 9 and the 5. But if you are having a horizontal moving average between your entry and your target, or view up between your entry and your target, you might want to either make view up or that moving average your target, or avoid the trade, because stocks, they could just bounce or view up before they reach to the 9 on the 5, or they could bounce off the 200 moving average before they reach into the 9 moving average in the 5-minute chart. In this case, it didn't even reach it. The stop loss was really tight and it was totally fine with that. It got you stopped out. Eventually it did hit view up and then it continued the trend. I see that you flipped your position here, right? I guess you took it to the long side, or you got stopped out one more time. You got stopped out one more time, right? So look now, at the beginning, when you are taking this trade to the short side, let me actually zoom it in more. When you take this thing to the short side, immediately that this candle opened here, started going down, you are taking it to the short side, you have either the wick or the gap right here, and because of that you decide to have your stop loss at half candle. It's getting back, it's getting you stopped out, and now it's coming back down. You re-enter. Look, now you're having this wick and you have this wick right here. Remember, you entered within the 1-minute candle, and because you're entering within the 1-minute candle, it could consolidate, it could just go a little bit back up, not breaking the high of the week, and then continue downtrending. Now you're having a good stop loss. It's definitely not the high of the week. I don't know why my mouse is hidden, but I'll be drawing, okay? So look at this now. Now it's not the high of the week, which is your stop loss. It's this place, which is your stop loss. Because it did bounce out of here, and when you re-enter down here, this was supposed to be your new stop loss and you'd have never been stopped out. Okay, so remember, the stop loss on those type of parabolic reversals, it could be one of the 3, and I will draw all of them right now. This is the candle here. This is, let's say, the shooting star or doji or whatever. You have a wick down here, and then the next candle, it's going back down. So what's your stop loss in this case? Anyone? What would be your stop loss if you're taking this thing to the short side? 1, 2, 3. 3 possible stop losses. Where would you put it? I'll stare at 2, tier 2, teacher 2. Low would put it at 1. IG1, ADG1. Okay, yes, exactly. This is what I would usually use as my stop loss. The previous week. I wouldn't use 2. You can use it now. By the way, 1 and 2 and 3, they're all good stop losses. You can use any of them, but I never use the high of the week most of the time. It just doesn't give me a good risk to reward, and most of the time those reversals, they don't even go to the high of the week. They could just pull back a little bit and work out, so that just misses my risk to reward. Yes, I'll be stopped out more often. I will re-enter and then the risk to reward will be good. So 2 is the safest stop loss. 3, I'm definitely not using it in this case because it's so tight. It's even below this body right here. 1 is the one I'm going to use. It's the previous week. If I have a week right here, that will be my stop loss. In this case, 1 will not be my stop loss. You have 1, right? You have 2, and it immediately dropped down. Let me just tell you now we are talking about this occasion. You see this week right here, it's below the body, so I'm not using it. I'm using it only if this week is above the body, and if the next candle goes immediately back down. So you are having this high on this candle, you are having this high, and you're having this high. I'm using the medium high right there. So this is the stop loss, and this is the first occasion. Now let's draw the second occasion, and it was here. 1, you are having big white candle. 2, you are having, let's say, shooting star or a doji or whatever. 3, you are having a candle opening here and dropping down. Okay, you are having 1 as a stop loss. You are having 2 as a stop loss, you are having 3 as a stop loss, and in some cases it's 4. So what would you use here, guys? Ken 4, Alistair would use 2, T-chart 2, T-chart 4, T4, 4, 4, 2, weak to enter. Okay, now look, the best 2 stop losses in this case is 2 and 4. You can't use 1 because it's the low of the body. And you can't use 3 because it's also the low or around the body. It's like so tight. You either use 2, either use 4. What I personally do most of the time, I use 4 just to have a good risk to reward. Most of the time, if it's working, it will not go to the high of the week. If it's failing, it will go to the high of the week. And if it's breaking it, it will give you a little bit of slippage. So the safest way here to use 4. And that's what you used right there. You used 4 as your stop loss. Now the last case scenario, you're having 1. You're having 2, and then you're having this candle, it's pulling a little bit back and it's dropping down and making a new low. So you are having 1, you are having 2, you are having 3, and you are having 4. What will be your stop loss, guys? HG will use 4, Marcus 3, Sam 4, Lou 4, Ken 3, Cher 3, 3. Yeah, I personally, now again guys, all of those stop loss they are correct. You can use whatever you want to use, but the best one I would use in this case, it's 3. And this is the scenario here. First of all, when you entered into this candle, you didn't have this week. It went immediately back down, so you used 4 as your stop loss and you got stopped out because of this week. Now it's coming back down and it's making a new low. Your stop loss should not be here. Your stop loss, or the best stop loss, the high of the week it previously bounced for, which was number 3, which is here. And in this case, you'd have got the risk to reward. So 3 scenarios and 3 different stop losses depending on what we see on those 3 different candles right there. What's the entry? On all the cases, the entry is the new low, if you were wondering, guys, because I remember I saw a question there. So yeah, that's it. The first time you're getting stopped out, second time should have actually worked out. Now, hello Gens Gamer and hello Lani. Lani, this is what we call a parabolic reversal. It's a stock going straightly up with no pullbacks, extended from the 9-moving average in the 5-minute chart. And when we are taking this into the short side, we are not going for a reversal all the way down. We are just catching the pullback. Market is trading in waves, going up and down, up and down, up and down. In these cases, we are trying to catch the pullback. We can't always catch it, but on some occasions, it's really obvious, similar to what it was right there. If candle 3 is lower than candle 2, would you enter on that low? If this candle is lower than this candle, right? let's say this is like that. In this case, it's either this as stop loss, either this as stop loss. Safest to have it at the previous week right there, not this one. Usually I do take this one as well. It depends on how fast I see it's dropping. If it's struggling, I would definitely use this as my stop loss. If it's just dumping down and I see that on the bid there are a lot of asks going through, I will use this as my stop loss. Okay, now let's see what you did after that. You traded NIO, same thing. It's not working, guys? Is it working? Okay, perfect. So, second time you're trying to catch it into a reversal right here. You see it's going to the 9 on the 5. Now guys, one thing I started noticing lately, I didn't include that in the webinar, but remember what we usually say? If you have 3 continuous bars, most of the time, not always, but most of the time, you are starting to have pullbacks, not always. Now I decided to implement this into those parabolic reversals. I want to see 3 continuous bars, and then on the 4th, I'm trying to find an entry to the short side for a parabolic reversal to catch that pullback down there. I noticed that on the first candle and the second candle, a lot of times these parabolic reversals, they fail unless the candle is really huge. So I try to avoid taking a parabolic reversal on the first and on the second candle. I try to catch it either on the third bar. Yes, exactly, IG. The third bar on the 5-minute chart or the 4th bar. And remember, not only having the 3rd or 4th bar, it's not enough. You need it to be extended from the 9 moving average on the 5-minute chart, and then you need to have a reversal candle. So what happened right here? You are having 1, 2, 3. You are taking it on the 3rd bar. And remember, the 3rd bar, it still could work out. The 4th bar is where we don't chase trade. The second thing right here, it was an engulfing candle, which I usually hate, but it was a reversal candle on the 2-minute chart, so it wasn't a horrible trade right there. You are taking it and it's getting you stopped out. What do we have after that? 1, 2, 3 candles. You are catching a reversal on the 4th candle because most of the time pullbacks are happening after 3rd candle. You are having a reversal candle on the 1-minute chart, having a reversal candle on the 2-minute chart, taking it to the short side, and this trade works out. So implementing the 3-bar rule in these reversals could save you from taking this trade. You could take the 3rd bar if it is so extended. Okay, it took so much time with this trade. I hope it was clear, guys, and let's go to the next one. And again, guys, we're going to go through one trade for everyone just to save some time. If we have time, I'll get back to the rest. And the target is the 9 moving average on the 5-minute chart. The initial target usually is the 9 moving average on the 5-minute chart. But I usually start taking partials at 3 or 4 hours. How much do I cover? I always cover 1 hour. So if it's going in my favor, I'm up 3 hours. I will lock in 1 hour and I'll have 2 unrealized and let it run more. This is if I'm so disciplined. If I start to getting FOMO, if I want to end up my day, I might take some more partials or exit all out, which is something bad to do because I'm trading my PNL, and I'm working on that for now. So let's see what a PFE did. Same thing, going up, right? No pullbacks. You are having a 3-bar setup. What's 3-bar setup? Kinda wide bar on the 5-minute chart, small bar after that, and then a wide bar. This is a 3-bar setup for a continuation. We see it here. Not an A plus 3-bar setup, but it's a decent one. After that, having a hanging man at the high of the day below a daily level. Now remember, I hate those candles for reversals, but those are still considered a reversal candle. A hanging man at the high of the day is a reversal candle. I just avoid them because they don't work well for me. Still a reversal candle. Taking it to the short side right there, and really tight stop loss right there or at the high of the week. Taking partials all the way to the 9 moving average in the 5-minute chart, and I guess you are exiting all out at a new 5-minute high. Now remember, guys, try to implement everything you know into how you are managing your trade. What was this? This was a parabolic reversal. A reversal, look at this, A, B, C, right? This was a parabolic reversal. A reversal which is forcing itself into the 9 moving average in the 5-minute chart. Now that you know how to trade ABCD patterns, and you know that after a parabolic reversal, the ABCD pattern is valid only if it's making a W shape. That's your entry point. Then you could hold on to your trade and exit only if you know or if you see that there is a W shape. We know that on an ABCD pattern, after a parabolic pullback, we don't take the first new 5-minute high. Why? Because it could be forming a reverse ABCD pattern. So what is breaking this reverse ABCD pattern? What's breaking this reverse ABCD pattern is the W shape. If you don't have this W shape formed, you could still hold on to this original short and see what it's going to do here. Is it going to form that W shape or no? If it's forming that W shape, you bail on your trade, you'll have the same exit, right? If it's not forming the W shape on the ABCD pattern and it starts actually forming a reverse ABCD pattern, you could add on to your original position for a bigger move to the downside. Still, I see that you noticed that this wasn't a great ABCD pattern. It started failing, you took it to the short side and then you partialed all the way down, bounced to view up. I guess this was long there if I'm not wrong. With some, I'm not sure what it did there. Either hotkey mistakes where you tried to partials and you were adding by mistake, but I see that there was a long here and then you started partialing all the way up. Yeah, hotkey mistakes. So good job on those trades. Lenny, let's see what you did. Where is Andrew? Andrew is still trading in the chat room every day, but he's not doing recaps anymore. He does trade live in the chat room, he explains his trades, but unfortunately he's not doing recaps on YouTube anymore. So let's see what you did on AMD. This was actually good, this was decent. I know that, look at these guys. AMD in the pre-market all the time, it's holding below view up and below most of the moving averages. This is showing us that the stock is weak. Along with that, on the daily chart, AMD had a doji on the top. Let me show you actually AMD here. Just to show you how to combine everything we have into the trades we're going to take. What do we have here, guys? Isn't this looking like the parabolic reversals we want to trade? Remember, any time frame you see, you could trade the setup on any time frame, even if it's the daily. The only thing is that the time frame is bigger and you will be getting your entries based on smaller time frames. What do you have on AMD? Really strong move to the upside, kind of extended, doji at the high of the day, a new low on the daily chart, which is telling you that this might actually be a short. This is what I saw on the daily chart today on AMD, and this is why I wasn't really long buys on it, though look at this, it's actually really strong for now, but it's still below the doji. Anyway, looking at this daily chart, I was short buys on it. Looking at the pre-market, it's downtrending or holding below view up and below the moving averages. At the open, it dumps closer to the daily level. Doji, this was a huge drop, right guys? It was around the $1 drop on AMD. $1 drop on AMD is so much. And then it's closing as a doji. This is where Andrew took it to the long side. I thought about taking it to the long side there because this was a parabolic reversal right there. What would be my stop loss? My stop loss would have been somewhere down there or at the low of this candle because it went down and then it came back up. And I noticed that the risk to reward for me at least is not there. My entry, my stop loss, and remember what we said, if we have a view up between our entry and the non-moving average in the 5-minute chart, view up should be the first target because it could simply bounce out of it. I noticed that this is not a good risk to reward for me, so I just avoided the trade. It actually ended up working so well. Where does it go to? Again, remember what we say, it sometimes goes closer to the 9 on the 5, sometimes it touches the 9 on the 5, sometimes it's wicking a little bit above the 9 on the 5 and then continues the downtrend. What happened in this case is that it wicked above the 9 on the 5, got sold back down. If you look at the previous candles, selling pressure right there, a red candle with a selling pressure, and finally a new low right there. Usually I wait for a for an M shape in these cases. And remember, you can get it before the W shape, you can get it before the M shape, but that's an additional confirmation. Taking it to the short side right here. Stop loss would have been right there, or somewhere right there. You choose, all of them are right or all of them are good. What I personally would have chosen, it's going up, dropping back down somewhere around here. I would have put my stop loss, and then just start taking partials all the way down. This was a smart partial, and I like it. There is no M shape here, Marcos. It just worked out. Remember, it's not textbook setups every time, right? It does sometimes it does the M shape, sometimes it goes without you. I personally would have avoided this trade right here because it's breaking two of my rules. One, there is no M shape in this setup. Two, I'm going in against a reversal candle, but still this is not a bad setup because the 5-minute chart is still looking good. It's closing below the 9 on the 5-minute chart. It's wicking back down. There are selling pressures. The daily chart looking weak to me. Combining everything, it's still weak. Not an A+ setup, but if you are taking it, it's not a bad trade, even if it's getting you stopped out. So taking it to the short side, partialing, and this partial was smart. Why is that? You see that it's making higher low waves. This is a reversal pattern, or it just doesn't show you that it's actually so weak. So he's taking a partial there. I'm not sure if it was a big partial. I would have taken a really big partial right there and exiting the rest at break even. So good job on this trade. Key, let's see what you did. You're welcome. TSM, something similar to what we said on AMD, but this thing is actually more clear. Why is that? It never made a new high on the 5-minute chart. It's always close to the 9 moving average on the 5-minute chart. So it's making a pullback, getting close to the 9 on the 5-minute chart and getting sold off. This is the trend which we told, a clear trend. When the stock is just making a high or maybe opening here, pulling back down closer to the low and then makes a new high. Next candle opens, drops down. On the 1-minute chart, this will look so ugly, so choppy, but still on the 5-minute chart, it's showing you a clear trend, right? So it's opening here, it's dropping back there, it's coming back up, making a new high. Opening here, maybe goes a little bit to the upside, drops down, maybe makes a little bit of a wick right there, and then whatever. It closes, but it's still making higher highs and higher lows. This is what's happening on TSM. It does those pullbacks to the upside. You see how it's being traded in that range? Every time it does those pullbacks within the 1-minute chart, but every time it's holding below the 9 moving average in the 5-minute chart, and it's making lower highs right there. On the 1-minute chart, sort of a pullback right there, taking it as close as possible to the resistance. Stop loss 1 or 2. I would have used one of those two. To be safer, maybe one, maybe closer to the wick, but anyway, one of the two was good. And then partialing all the way down. I like how this wave didn't scare you. Why is that? Because there is no new 5-minute high, and looking at the previous price action, you know that it can make it all the way back up without making a new 5-minute high. And if it's not making a new 5-minute high, it's not getting you stopped out at break even, and then it's just going to drop back down. So yeah, I like that you did nothing there. Took another partial in case it was forming a double bottom. Smart as well. Took partials at the breaks. I wouldn't have added right here because this is already like so too much right there. I know it's the second candle. It's not bad, but I wouldn't have done that because it's right into the daily level. Then you took some partials right there and exited the rest at break even. On the 1-minute chart, doesn't it look like it could squeeze up higher lows? I remember this had huge short float as well. So look, we don't have higher low waves. This is the first wave, the low, then it's coming up, then lower high wave, then it's coming back up, then lower high wave, then it's coming back up, lower high wave, lower low waves. But if this was good, I would have avoided the last ad. Other than that, it was good. Edwin traded TSM. Let's see what you did, Edwin. Tried to catch this thing to the long side, I guess. Now let's see what you did there. Dropping down, pulling back into the 9 moving average in the 5-minute chart. See how he noticed it? He reads the price action in the 1-minute chart. He sees this squeeze right here, and he looks what it's doing on the 5-minute chart. This right here is the 9 EMA on the 5-minute chart. It's actually right there. It's the 9 EMA on the 5-minute chart. Continues to drop down right there, getting kind of far from the 9 moving average in the 5-minute chart. So gappy. You're having 1, 2, 3 red candles right there. taking it to the long side on a new 1 minute high. Let me zoom it in because I guess this is so small, guys. Taking it to the long side after the indecision candle on the 1 minute chart. Stop loss not at the low of the week, because look at this, guys. You don't need to put it at the low of the week. If it's getting to the low of the week, it's most definitely getting you stopped out. And if you are using it at the low of the week, you will also get some slippage. 5 cents, 6 cents, and remember, on those parabolic reversals, your stop loss is already so tight. If your stop loss is 5 cents and you're getting a slippage of 3 cents, you're getting almost to our loser. That's why you need to use somewhere in between as your stop loss. Once it's breaking a level, stop losses get triggered and you will get small slippage right there. Now, taking it to the long side after the indecision candle, and unfortunately it's getting you stopped out. Coming back up, no confirmation candle. You avoided the trade because there was no confirmation candle on the 1 minute chart. I'm not sure how the 2 minute chart looked like. If those two candles right here formed up a hammer on the 2 minute chart, I would have taken it to the long side here, and what would have been my stop loss? This. Right, guys? We use, let's say we're having 2 minute charts. This will be our 2 minute candle. Not like this, it will look something like this. I'm not sure yes, but let's say this is the first candle. Then it opened here, it dropped all the way down here, and it got bought back all the way up there. So we're having a red hammer right there, and then we're having a new 2 minute high right here. What's the stop loss? This previous candle right there. This, if you are taking it to the long side for parabolic reversal right there. If there is no confirmation candle on the 2 minute chart, I would simply avoid it. Now let's see what it did on the 5 minute chart. On the 5 minute chart, it's dropping down, coming back up, pulling back. You see that it tried to form a reversibility pattern, right? Because it broke down on the 5 minute chart, but for some reason it got bought back up. Now I personally would avoid this trade because I don't love going against the non-moving average on the 5 minute chart. But on the 1 minute chart, if you pay close attention to it, you see that it's actually making higher low waves, no lower high wave. If you read the price action and you see this whole drop right there, how much it dropped right there, and you see those waves right there, you could try it to the long side. I personally would avoid it because one, it's still below the 50 moving average in the 1 minute chart. For it to be an extreme reversal for me, I want at least to have a cross of the 50 moving average with the 9 and the 20, and then somewhere right there would be my entry, and I want to see it going above the 9 moving average in the 5 minute chart. Pre-entered it a little bit, same idea but a little bit early, and I love how much you held on to your winner. Now this was right here, guys, an extreme reversal, not a parabolic reversal, but it was a little bit early for it. Still good job. Why don't I take it before the break of the 50 moving average, before the cross? Because sometimes it goes to the 50, bounces out of it, and then continues the downtrend. I wanted to just break above the 50 moving average, and especially we had a hammer right here, which is a good confirmation. This would have been a really perfect entry, or an ad right there. Mu'in, let's see what you traded. You're welcome. So you traded TSM, 1 minute open range breakout, and then sort of 3 bar setup or a reverse ABCD pattern after confirmation candles. Now, for 1 minute open range breakdown, I personally would have avoided this trade. Why is that? Because the first minute candle is a hammer, and the low of the week is down here, and I'm not sure if it's going to reach at least the low of the week, or maybe it will bounce a little bit above it. But I see that you had your target above the week and you started partialing earlier. I usually avoid going against wicks. If this was a red candle with no wick below it and then it's making a new 1 minute low, I would have loved it way more. Because of the wick, I don't like it so much, but still not bad. Pulling back, dropping down, pulling back one more time, double dojis, double confirmation candle, new 1 minute low, taking it to the short side and riding it all the way down. Same thing on the 5 minute chart. Look at this, it's never making a new 5 minute high right there. So yeah, this was good. Setup based on the 5 minute chart and based on the trend on the 5 minute chart. Entry based on the 1 minute chart. Why wouldn't I be interested in taking it to the long side here? definitely, because it's so close to the 9 moving average on the 5-minute chart and close to VWAP. So if I just decide whether I want to take it to the long side or to the short side, it would definitely be a short for me. Ivan, let's see what you traded. The confirmation candles are candles which are supporting the direction of your trend. If you want to take it to the long side, it would be either a hammer, it would be either a doji, it would be either a spinning bottom, it would be either a harami candle. If you want to take it to the short side, it's the same, but but there will be a reverse hammer instead of the hammer. It's candle which is confirming the direction you want to take it to. Now let's see what Ivan traded. Ivan first trade was a parabolic reversal, double hammers on the 2-minute chart. That's it, you see guys, parabolic reversal, it means it's extended from the 9 moving average on the 5-minute chart. Confirmation candles, double hammers or a doji and then a hammer on the 2-minute chart, entered on the break above the hammer's body, the entry at the break above the hammer's body, 9-cent risk, sold 50% at 4 hours. This is amazing patience. So this was his reward. Look at these guys. This is his stop loss. This wick right here is his stop loss. His reward first 4 hours. Good patience holding on to it. Now look at this. If this is 4 hours, you can imagine how much that is. And I bet in average it was at least 7 hours right there. Sold 50% at 4 hours. Shows 2 red arrows because my limit order wasn't fully filled initially. So it means that those 2 arrows right here were partial fills. 1 partial, but it took him 2 orders to get filled. I think this was because the KNG didn't have tightest spread around 5 cents at this time. Another 50% at 5 hours. 3rd partial, break above VWAP. 4th partial as price near the 9 moving average on the 5-minute chart. So I guess this is your 9 moving average on the 5-minute chart, or the purple line. I'm not really sure, but I think it's, let's take a look right here. I think it's this blue line is the 9 moving average on the 5-minute chart. So sold the rest as price went red to green and was up at yesterday high level. So what was the spread on this thing, Ivan? 3 to 5 cents. Well, 3 to 5 cents and you had 9 cents stop loss. Kind of yes, tight. Because if it goes against you only 4 cents, your stop loss might have been triggered. I don't think you should have avoided this trade. What I think is you wanted to give it a little bit extra room so that you don't get slippage. On a normal parabolic reversal, this is a perfect stop loss. But if there is a wide spread on those on some type of stocks, you might want to give it some extra room, not because you believe that it will go there, but so that you don't lose a lot if it goes against you. Wide spread means it can move a lot, and this is why this candle just spiked up all the way to 4 hours, because the spread there is so wide. I like how much you held it. You risked 1 hour, you made around 7 hours. Look at this, you could just continue trading, right? You might lose 1 trade, you might lose 2 trades, you might lose 3 trades, you might lose 4 trades, and you're still up 3 hours, right? All you need is 1 or 2 good trades and hold on really well to them. Really good patience there. Now, Ralam, let's see what you did right there. Traded VXRT, and I see what you did right there. Let's go through the bigger time frames. Daily chart, VXRT gapped up. Not a reason to be long biased, but we go through all the confirmations we have, through all the indicators which we have. Gap up, strong indicator. 15-minute chart, it's making a new 15-minute low. Not so much long biased based on the 15-minute chart. What I like about the 15-minute chart is that it dropped all the way down and then it's squeezing back up, still on a 15-minute low area, which is why I'm not really long biased yet on it. 5-minute chart, huge drop, and it's within a 5-minute candle right there. Now new 5-minute high, it's still on a lower high, so because of that I'll definitely be a little bit short biased on it. Moving averages and view up are all above the current price again, which is why I'll be a little bit short biased on it. 1-minute chart, buying pressure week, buying pressure week, buying pressure week, buying pressure week, double hammers right there, new 1-minute high. For a scalp, not bad. You could take it to the long side because it's within, and you know that you could take partial below the 5-minute high. I personally would have avoided this trade based on all of those indicators. The 1-minute chart showed a really good thing. You see an increasing volume at the low of the day, which is a reversal indicator, and it's also a hammer going up, forming a higher low wave, double hammers, and a new high. Also a good indicator to take it to the long side. So both deciding to take it to the short side and to the long side were good. I would be a little bit more short biased, but I wouldn't take it to the short. Why? I told you I don't love going to the short side against hammers, even if it's making a new low right there. To the long side only if it squeezes above all the moving averages and then pulls back, or if it squeezes up with volume, which we have right here. You see it's consolidating around above you up, making a shooting star, making a new low, trying to break back down right there, but it can't break down. It gets squeezed back up once the volume comes in. Once it breaks the pivot point we're having right here, this shouldn't have been a bad entry to the long side. This is still not bad, but it wasn't perfect there. I like how much you held on to your winner. That was perfect, really good patience all the way to the daily level. This is also a good partial. Why is that? We're having a double top pattern on the 1-minute chart when it's extended from the 9-moving average in the 5-minute chart. So it's starting to form a parabolic reversal, and it was actually a parabolic reversal, pulled back all the way to the 9 and the 5, wicked a little bit above it, which happens, and then it's continuing the uptrend all the way to the next daily level there. Jesse, let's see what you had there. So overall question, how is my thought process on this trade? Am I missing any signals that could trigger entry, profit taking, adding up, or holding for additional gains? Extreme reversal. So Jesse took this for an extreme reversal or a double bottom setup. Now let me just understand the time frames. We're having a 30-minute chart there, 2-minute chart here, 5-minute chart here, and 1-minute chart right here. So you are taking it for a double bottom, and I could see the double bottom only on the 1-minute chart right here. Found on top and bottom reversal scanner. So Jesse found this trade on this BBT scanners. The 2-minute chart, which is here, shows a double bottom with a decent buy candle at 9.56. So you see these guys, one bottom coming back up, another bottom coming back up with a decent reversal or indicator candle, which is the hammer. That was a good signal right there. Watch it break that candle high. When it came back and test, it held and I jumped in. So what did JC do? It broke up, didn't rush the entry, waited for a pullback, noticed that it's actually holding, and then entered into the trade. The entry was at 21.77, somewhere in this area. Stop loss 21.67. I guess somewhere at the low of the 1-minute candle. Yeah, I bet somewhere at the low of the 1-minute candle. Target for R, which is the 9-moving average on the 5-minute chart. So this is this is a parabolic reversal, more of an extreme reversal. What's the difference? I'll tell you about it right now once we're done with the trade, with this trade. But yeah, I would go for a parabolic reversal more than a parabolic and then an extreme reversal here. Dropping down, 1 candle, 2 candle, 3 candle, 3 consecutive candles. On the 4th candle, you are waiting for a reversal candle, taking it on a new 2-minute high or a new 1-minute high. Stop loss in this case. It's a double bottom. It's tough to decide what's stop loss here. I would just use it somewhere in the middle of the candle because there is no clear stop loss for me. Target the non-moving average on the 5-minute chart, which is around $22. $22. partials. Each partial is one share out at each R level for tracking purposes. 85% out at 4 Rs, went all the way to 7 Rs so far. The bad, no obvious volume confirmation, did not pay much attention to the level 2, could have gotten an extra 2-3 R out of it. Now look, this is something we all regret. We never know how much the stock is going to go. At the moment when you are partialing, you are so happy to get 3 Rs, you are so happy to get 4 Rs. When you see that it actually went to 7 or 8 Rs, that's where you regret. Why didn't you hold it, right? Sometimes you are being patient. You take small partial at 3 Rs, locking in 1 R. You hope that it will go higher, and then it just goes back against you, and you end up exiting at break even, and you are up 1 R on the trade instead of being up 3 or 4 Rs. So again, you still regret that you didn't exit all out at 3 or 4 Rs, because that's the maximum you could have got out of it. We never know the maximum we can get out of trade. Sometimes we can get more, sometimes we can get less. We trade the indicators and we trade what we see, what often happens, right? If you executed it following your rules and you missed a big part of the move, don't regret it. If you executed it not following your rules and then missed a big part out of it, then that's where you might regret it. So how would I execute this? All your thought process was perfect. This is a parabolic reversal. It is extended from the 9 and the 5. You are having a reversal pattern, plus you're having a confirmation candle. You're getting into the long side. Your target is the 9 moving average on the 5-minute chart, which is 22.25. You took some partials at 4 Rs because it's 4 hours, right? I mean, it's tough not to partial at 4 hours. Some of us are taking partials to 1 hour or 2 hours. 4 hours, it's really normal to take some partial. I usually take partials at 3 hours, though that means I'm trading my PNL, which is not really smart. Now it goes all the way to the 9 moving average on the 5-minute chart, which is 20.25. And you held on to it, right? There it is. It went up, you held on all the way to the 20.25. Now it's coming back against you, starting to form higher lows right there. No reason to exit. We usually try to leave 5 or 10% for a bigger run, and then it actually works out, and you got most of the move right there as far as I see. But it's not bad that you took some partials there. Wouldn't you have regretted not partialing if it went this move right there? Remember guys, imagine guys, you're long right here, you didn't take any partials on the way up, and now it's going against you. How would you feel? You don't know that this will happen. You'll be so nervous, and now at this stage, instead of having like 5 hours, you will be up 2 hours, and you'll tell yourself, let me just bail on the trade and get the 2 hours, and at least I will be up 2 hours for this trade, and then it will go against you. Yeah, it will be a torture. So it's smart to take partials on the way up, because you know that for now the stock is weak. You know that it's more weak than it's strong, and it could form a reversibility pattern and continue the downtrend. We're getting into a parabolic reversal. We're getting into a counter trend. So it's smart to take early partials. You can regret taking early partials if you are getting into a trend and then you're taking early partials right there. You got into a good place. You got into a trend and it's still working into your direction. In this case, you need to hold. But when you're going against the trend, it's smart to take early partials, especially if you're getting good Rs right there. I'll show you a trade I did today, and I also got early partials on it. I think it was TCOM. It was on the RSI Extreme scanner. RSI Extreme is also a reversal scanner, right guys? So look at this. TCOM just bleeding down. $4. Filled all the gap to the downside. Went into the 9 moving average on the daily chart right there. On the 1-minute chart, dropping down so much. On the 2-minute chart, dropping down. On the 5-minute chart, 1, 2, 3. 3 consecutive red candles right there, right? Now, not exactly a reversal candle. It had a bigger upper wick. But looking at the 9 moving average on the daily chart, looking at this move right there, and this is the first new 1-minute high, I decided to take it to the long side. I had 8-cent stop loss on this thing. What was my stop loss in this case? Now, one thing bad I did, the technical stop loss should have been here. This is the best stop loss in this case. What I used for my stop loss is this level right here. If I get stopped out, I'd have regretted it. I used this as my stop loss, and the best stop loss would have been this previous. Remember, we talked about that at the beginning, not the low, the previous. This is the best technical stop loss. 8-cent stop loss, took partial at 4R. Now this is bad. right? No need to take a partial right here. Let me just show you how this looks on the 5-minute chart. Look at this all drop right there. It needs to make pullback, right? The 9-moving average is way far right there. No need to take a double early partial. One partial because I was at 4 hours, not bad. But locking in more, that wasn't smart. So I locked in around 50 or 70% of my position here. I had only 30% left, and that was bad. Now look at this. It's continuing to go up. Look at this. 8-cent stop loss with an entry at 27.48 and a move of 70 cents. That's around at least 8 to 9 hours, right? And what I got out of this trade in average was around 5 hours. So I missed a 9 or 10 hour trade and I got only 5 hours because I mismanaged it. Now here I broke my rule. This is where I broke my rule. Getting all out or most of my position out closer to the 9 and the 5, that was smart. In your case, the stock did break the 9 and the 5 and it did continue going higher. In my case, it didn't, right? If you were in this trade and you held into it and it went against you, you would regret not exiting all out closer to the 9 and the 5-minute chart because you let some gains go against you. In my case, because it didn't continue going up, I was so happy that I exited all closer to the 9-moving average and the 5-minute chart. And these are my rules. I wouldn't regret it if it continued going above the 9-moving average and the 5-minute chart, but I regret exiting most outright here. My rules are telling me exit 70% of your position or most of your position closer to the 9-moving average and the 5-minute chart or at the 9-moving average on the 5-minute chart. This is where I broke my rule and this is where I regretted. This wasn't bad right here. You want me to high? Yes, I refer to the high of the body. I don't refer to wicks. Side tracking a little. How many tickers with these 6 time frames are you usually looking at during the day? Marcos, only 3. I don't watch more than 3 stocks at the same time, especially that I'm going with fast trading style. You can see that 1 minute is my entry. I need to pay close attention to it. If I'm watching 5, 6, 7 stocks and I'm late around 10 or 15 seconds into some trade, I will miss the move. So I can't pay close attention to a lot of stocks at the same time. It's only 3 maximum. What about taking off the 9 EMA and then doing a free roll if it turns into a mountain pass or something similar? You could do that, but I don't use a free roll hotkey, to be honest. I just am consistent with what I'm doing now, so I'm not adjusting it. I keep adjusting the setup I'm trading, but I don't want to add anything to it now. Yeah, at least for now. So everything you did, Jesse, was really good. Jonathan, let's see what you did. Got into HOG when it broke above the resistance, $27.10. Now let's see the time frames quickly. I need to understand 5-minute chart, 1-minute chart, and 30-minute chart. So you got into it to the long side once it broke this resistance. You have a resistance right here. That's smart, actually. I like it. Once it broke it, to take it to the long side, but it reversed and stopped me out. Then it bounced and has already hit my 6R. This seems to happen to me a lot, and it feels like the market is shaking me out on purpose. We've all been there, guys, right? Tell me one of you who didn't have this scenario happening to him. It's happening to everyone. Sometimes it's getting you stopped out right to the penny, exactly to the penny, and then it goes without you. You know how algos trade and how market makers trade? It's all psychology. They know where you would put your stop loss, and they know how to drive the market there to get you stopped out. And that's why we need to be smarter. You see that a lot of times this is happening to you. You see that most of the time when you're having your stop loss to the penny, to the technical stop loss, it's getting you stopped out. So what's the solution to this? It's simple. Give it a little bit more room. That's why I don't have stop losses. Yeah, I hope that's a joke. I bet that's a joke. Yeah. So guys, if you get stopped out all the way every time to the penny, just give it more room, and that will work. Trust me, that will work. Just give it extra 5 or 3 cents, more than you usually do. Now, you'll still get stopped out, but you will get stopped out less often. Now let's see what happened in this case. You have flat resistance right there. You're getting in to the long side and you're exiting to the penny. Now I wouldn't have used this as my stop loss, right? The stop loss wasn't really clear. What I would have used in this case for stop loss, the wave. Remember, we're trading waves, so it's dropping down, coming back up, breaking the resistance, pulling back down, making a higher low wave, and getting back up. You are getting into the long side right there. What's your stop loss? Your stop loss is the previous low. You can't put your stop loss within the candle, right? At least a new 1 minute low. Remember what we said? Once the stock is breaking a resistance level, your stop loss at least a new 1 minute low. If you do that, it will not get you stopped out. But the better thing to do is using the waves, the higher low wave. I know we try to tighten our stop loss just to get bigger reward on our trades, but tight stop losses, you can't have a tight stop loss every time. It depends on the situation, it depends on the trade. It depends on where the wave was. If you are getting in so early and the low of the wave is there, you could use that as your stop loss. But if you are getting late, you can't just tighten your stop loss to get a big reward. What's most likely to happen is that you will get stopped out before the trade works out amazingly well. Your entry was good, reading the price action was good, kind of tight stop loss, but you'll definitely work on that, and next time we will get it better. You're welcome. So Abu Daniel, let's see what you did there. Traded MO right there, and let's go again through the bigger time frames, right guys? MO, it was below VWAP, below the moving averages right here. I'm not interested in taking it to the long side because there is a lot of resistance ahead. Only taking it to the short side if there is no setup to take it to the short side. Just avoid it and continue watching it. You don't need to force a trade every time it looks to the long side, and you don't need to force a trade every time it looks to the short side. Be patient. You need only one good trade, right? Day trading isn't easy. You can't finish every time the first 5 minutes or the first 10 minutes. It's not an easy job because you are ending your day in 5 or 10 or 15 minutes. It's an easy job because you can determine how much you're going to make out of this trading. You determine your risk and you determine your reward, right? But before getting into this stage, you need to develop the patience. Now let's see what we have in the 5-minute chart. Remember, 3 consecutive candles. 1, 2. Getting on the first one is the best if you can get. Here on the first one, it wasn't so clear. It was somewhere right here after this hammer, or somewhere right here. I would definitely not get on the first candle because we're having a pivot point right above us. Getting in on a new 5-minute high after it broke the resistance, that was good. Went to the long after a bottom reversal confirmed after a 5-minute high. Partials at level. Had some levels and partials all the way on them, and then exited the rest at break even. Now this was good. This was good. 1, 2, 3, and see what happens after the third candle. Once it's getting you can actually implement this into your trading. You know that most of the time after a third consecutive candles, what happens, especially after a parabolic move, it could pull back to the 9 and the 5 and then continue the trend, or it could drop down. Now you don't know what's going to happen right here, but you know that most of the time what's going to happen after 3 consecutive candles when it's getting extended from the 9 and the 5 is a pullback right there. You also see a reversal candle. You also see a double top right there. Once you see a new low and I see you did that, you bail out most of your position. Not all of your position, but most of your position. Getting into your break even, not bouncing off the non-moving average in the 5-minute chart as we wanted to do, closing below it. That's it. The trade is done. You managed it really well. Yeah, I do that in week. I do change my stop loss depending on how the trade is going, but that depends on the setup you have taken it. If it's trend continuation, it's making higher low waves, new stop loss is a new higher low, and I usually add after those higher lows. If you are on a reversal, especially parabolic reversal, it's usually fast play. You can't really change your stop loss. It stays the same, and most of the time when it's working out, you're already out of it, or it's the break even. If it's making a new wave, so let's say this is happening, it's going up, dropping down, you are taking it to the short side here, you are taking some partials down here, it's pulling back, not hitting your break even, making a lower high wave, and it's starting to drop down. Now in this case, you don't need to hold it to your new original stop loss. The price action showed you the new wave, showed you the new resistance. That will be your stop loss, right? You don't need to hold it all the way back there again. Do you take extreme parabolic reversals exclusive, or do you sometimes take such trades as break 5-minute chart ABCD pattern? I actually came to the extreme reversals or parabolic reversals because I was trading the ABCD patterns. I noticed when those ABCD patterns or trend trades getting extended, and I noticed when they start making those big pullbacks. And when I'm in a trend, in a really good move, sometimes I was holding through this pullback and I was exiting with a small profit. But noticing that I should actually exit right here, I started implementing this place as a new setup to the short side. Ken, let's see what you did. Ken traded run. Same thing, guys. Parabolic reversal. What do we have? 1, 2, 3. You're looking for a good entry down there, but you don't base your entry only because you had 3 trades. You see that it's extended from the 9 and the 5. You see a reversal candle forming. Take it to the long side. What's the stop loss? Either the low of the... No, the low of this week is actually so low. Either a little bit below the week or right there. I think it will be only one. There is literally no difference there. Taking it to the long side. Partial. This is so good patience. You are way better than me on holding on to your winner trades. That's amazing. Getting all the way to the 9 and the 5, taking some partials and exiting all the way down there. Now look at this. Remember what we said about reverse ABCD patterns? A, B, C, parabolic pullback. We don't get into it on a new low. We wait for a W shape, which actually wasn't there. If it's, an M shape in this case. If it's making it, that's a good short, and that's a good place to bail all out. If that's not going to happen, what it could be forming is an A, B, C, D pattern. So it's not necessary to bail all out on a new 5-minute low. In this case, in this type of trades, you could leave 10 or 20% because what could be forming is an ABCD pattern, right? If you don't have the M shape, no need to exit all out right there. Still, you really were patient on it, so good job. Do you usually take the first partial at 3R or 4R, and how do you decide when to do which? I tried. It's tough to say because it depends on the red tick. When it's going steadily up, a little bit down, a little bit up, I see that it still has strength into it. I'm holding it. Sometimes it gets into a level where it's just can't go up. You see that it's hitting a flat top and it's getting pushed back down. Trying to go up, can't go up, and trying to get pushed back down. I see weakness on that line and I take it at 3 hours. If there is no weakness, I'll be patient and I will be holding it to 4 hours at least. Sometimes there is even no reason to take partial at 4 hours, but I can't hold more than that for now. Working on that. We'll definitely get there anytime soon. So NIO. ABCD pattern, right? 1, 2, 3 candles. A pullback candle. Bouncing of view up. I would have waited a little bit more, but still not bad. I see that you are taking it to the long side for an ABCD pattern. Stop loss, the low of the wave. Look at this. He implemented a technical stop loss right there, because of which didn't get stopped out. Entry at 12.10, at 12.01, good entry. I would have waited a little bit more just to have confirmation of the W shape, because this was a reversal pattern. It did a double top right there. Drop down, yes, it is still an ABCD pattern right there, but we are still on a lower highs on the 5-minute chart. What it could have done is making a lower high on the 5-minute chart on the next 5-minute candle. Right here, you will get the same entry, but at least after confirmation and after a double bottom confirmation right there. So yeah, still not bad. Taking it to the long side, put your stop loss right below this week's, which was smart. You didn't get stopped out. Took the first partial at 2 hours, and then you took most of your position out at 2 hours again. You were scared because of the engulfing. But remember, guys, what do we have right here on the 5-minute chart? Stock getting extended from the 9 and the 5. It could get pulled back to the 9. It could pull back to the 9 and the 5 and then continue the uptrend. You went in with the trend. And when you're with the trend, with an early entry, don't get scared by pullbacks. You could get scared by pullbacks when you are in a reversal pattern. But still, you managed it well. You got more than 2 hours. That's a really good thing. Mav, let's see what you did. SPPI, unfortunately I don't have the 5-minute chart. I don't see what you saw before your entry. I see that there is the 9 moving average, the 20 moving average. Can't really tell what you saw right there. If you can, next time set as the 1-minute chart and the 5-minute chart with at least 20 minutes of data before it. It's really good that you held on to your winner. I see that you added there. Now this I wouldn't have done. If this was short, I wouldn't add right here. Why is that? You have a cross of the 50 moving average with the 9 and the 20. And the cross of the 50 moving average with the 9 and the 20 is usually a reversal pattern. It could just go against you. I would have waited for it to actually prove me that it's not strong. And I see that it's bouncing 2 times out of this moving average. This would have been a good place to add. Or at least once it goes below the 50 moving average, one more time, this would be my new stop loss. I wouldn't have added it on the way up on a reversal pattern forming there. And the last trade we have there, Klaus. Let's see. Okay, the second trade he said. Klaus traded BA. Let's go again through the bigger time frames. Daily chart, choppy, nothing to tell right there, right? 15-minute chart. The first 15-minute chart was so bullish. You're taking it at the beginning of the day, so it's still looking strong to me right there, right? Bullish on the 15-minute chart above all the moving averages, which is not bad. The 5-minute chart squeezing above the moving averages, which is still not bad. On the 1-minute chart, having an ABCD pattern with a hammer as confirmation candle, taking it to the long side after the confirmation candle. Now this is an ABCD pattern on the 5-minute chart, along with the 5-minute open range breakout on the ABCD pattern on the 1-minute chart, along with the ABCD pattern ABCD pattern on the 1, along with the 5-minute open range breakout on the 5-minute chart. You're taking it to the long side. I like your stop loss. Look at this. He didn't get stopped out. He was still in the range. This is the range right there. Since you are entering or getting into a trade within the range, your stop loss is the low of the range. Never get stopped out and exit all up there. Now this is something I wouldn't have done, exiting all out. What I would have done is just taking a partial at the high of the day, just in case it's going to form a double top right there. Remember the ABCD pattern and the opening range breakout candles, those are breakout setups. Most likely it is breaking out the highs and continuing the uptrend. That's why you don't want to exit all out. Some people are entering within the range. Those are really smart people, because you are getting within the accumulation phase. And if you get this good of an entry, it's never hitting your stop loss. Why is that? Because the previous resistance, most of the time, it's acting as a support. It could work out, it could continue, it could drop down, but you get into a good entry, because of which you can always add in when it gets back closer to the previous resistance. If it's dropping or breaking it, you could exit at break even. If not, you are in a good trend. I like your entry. Could have held a little bit more to the winner. I bet you got the risk to reward, which was smart there. ABCD exit at the half of the day. I freaked out and exited all. Should have held longer, but yeah, it was still good. Klaus, good job. Really good trades, guys. If you have any questions, you can always email me. We're a little bit over time. Thor is now in the chat room on the microphone. He's making some good calls on his trading, so I really recommend listening to him. He's good at trading the level 2. He's good at trading volume. And again, if you have any questions, email me. Respect your rules. Don't overtrade. And don't trade past your max loss. Amen, which time frame is recommended for parabolic reversals? The 5-minute chart and the 1-minute chart, Tony, are enough. 1, 2, and 5. So yeah, guys on YouTube, I'll type my email here because we're over time. You can send me any questions I didn't reply to there. And have a good day, everyone. Thank you.